You go into the store, you buy some food, you get it instantly. You buy a new car, a new iPhone, you get possession of a physical product. And if you think about life insurance, all they're really selling you is a promise that when you're gone, somebody's gonna show up with a check for your family.
Why are people not really think about or inquire about life insurance?
People usually buy life insurance when something happens in and around their surroundings. How many people in their 20s and 30s are experiencing that? The idea of investing sounds a lot more exciting than the idea of protecting yourself. The probabilities are stacked in your favor if you're younger.
Life insurance is for everybody, but somewhere down the line, that trajectory, that way of thinking changed for you. How did that happen?
Burnout, simply put, burnout.
A lot of people protect their phone, their car, even their income before they seriously think about protecting the people they love. That's the tension in this episode. I'm joined by Rickson Dsouza, a life insurance advisor, entrepreneur, author, and speaker to unpack why people wait, what they get wrong about life insurance, and how to think about protection with more clarity before life forces the conversation. Rickson, how are you doing today?
I'm doing great, Dwayne, and how are you?
I am doing wonderful. It's good to see you and really good to have this conversation. We're going to be talking about life insurance. You're a life insurance advisor. And
right.
As I was preparing for this conversation, I was really thinking about life insurance. And it's something that I have. And I know there's a lot of people that do have it. But I also know there's a lot of people who don't. And it seems to be something that people don't really engage in acquiring until something scary happens or they're close to something scary happening. So what do you think people are really avoiding when they put off life insurance?
I've been doing this for 26 years, by the way. So since I was 21 years old, so 27 years. And honestly, it's not the most sexiest proposition to be purchasing. If you think about what a life insurance advisor does or what the contract does or what the website does, is it promises to deliver a liquidity kind of a situation to your family when you're gone, possibly 10, 20, 30, 40, 50 years after you've purchased it. Let's compare that to purchasing anything else, right? Literally anything else. You go into the store, you buy some food, you get it instantly. You buy a new car, maybe you have to wait a couple of weeks, but you get it pretty soon. A new iPhone, a new home, you get possession of a physical product. And if you think about life insurance, all they're really selling you is a promise that when you're gone, somebody's going to show up with a check for your family so that they have liquidity to continue living their life. Listen, man, this is a difficult, I've been doing this for 27 years. This is a difficult promise to sell, first of all. Secondly, I always think about dentists and life insurance advisors, right? Because dentists start their day by sticking their nose into people's mouth, Life insurance advisors start their day. Their idea of a good day is having spoken to clients about possible death and how they should prepare for it. It's a morbid conversation. It's easier to ignore it as much as possible than to face it head on. I think most of the people that actually face it head on, like you said, are probably motivated by a situation that took place in a social circle or in a close family in the recent past. Unless they find some kind of an identification to that, it's not something you wake up thinking, hey, I need life insurance today. Right? Yeah. It takes some planning, I'd say.
You say it's really a difficult sell. So you identified some things there in terms of the advisor's position. What do you think makes it difficult for the individual who needs life insurance but is trepidatious about engaging in it?
So I'm going to say the industry in its own has had a bad they did not have the best image, let's say, globally for that matter, right? Because life insurance advisors typically are remunerated in terms of commissions from the sale of a product, which typically is made by scaring somebody into buying a solution. So of course, the life insurance advisor is going to come up and say, you need to buy a life insurance policy. I think the reason I said it was a difficult purchase as well is if I was the client, if I didn't have this amount of experience in the business that if I was just a buyer of the product, I don't know how convinced I'd be with an individual coming and selling me the need for protection or liquidity for my family if the worst happened. I see the point, I get the point. But many a times, even the way it is sold, the pitches that are made are dated. I think today's environment, today's market deals well with data, deals well with information. And I feel that if that information was provided from a case study standpoint and if data was given transparently, then I feel more people would be aligned towards buying life insurance products than being sold it, if that makes sense.
I guess I wonder, it makes sense, but I guess I wonder why people would be concerned about that whole transaction or engaging into buying life insurance because they say often, and it's a reality, that the only things that are guaranteed in life are death and taxes. We all know we have limited finite time on this world. Why wouldn't this be something we would be more comfortable with?
I think there is an environment of analysis paralysis, right? You make a bad investment once, you bought the wrong stock and it crashes, and you're like, you know what? It's fine. I made a mistake. I lost some money. Am I bothered by it? Absolutely. But you know what? Next time I'm not going to buy that same stock. My next investment is going to be more carefully planned out. But when you subscribe to one of those life insurance policies, you're saying, I have chosen to have this contract in place for X number of years. And when you have that noise of so many different propositions coming at you simultaneously, there is a space where, unless you're dealing with an independent financial advisor who you truly trust and believe has got your interest over their own interest, until that happens, you are going to be bombarded with a lot of noise and making a decision then saying, I'm going to choose this over the other, even though 8 of my friends have got that proposition. This is the difficult one. It's like you're
Hmm.
stuck with that decision thereafter because you might lose some money as a result of it. You committed to something, you're bound by it. There could be so many reasons. I think one of the reasons that I see people delaying that conversation is because they don't believe they are in their best shape. So I'll give you some context, right? I got into the life insurance industry in the year 1999. I was 21 years old, and I got in because my mentor at the time told me, Rickson, it's a very simple job. You can make as much or as little money as you want. You can work as many or as few hours as you want. All you need to do is meet 3 people a day for 6 days a week and talk to them about life insurance. And I said, this is amazing. I was sold. The fact that there was no, you know, office politics, so to speak, in terms of whether I should earn more money or not. It was solely dependent upon my effort. I loved it. And then one of my clients, 2 years into the business, one of my younger clients passed away. And the way the beneficiary nomination was structured was not the best. He was trying to get hold of me. Unfortunately, I didn't have the money or the time to meet up with him. And things went a little lopsided. His wife, who was pregnant, didn't receive the entire proceeds because it was shared with his mother. And he was trying to change that. I didn't have the time for it. And this plagues me even, it haunts me even till today that that was me doing a job in a bad way. And this is 21 years ago. Today, when I look at myself as a life insurance advisor, I see a mission and a need for me to show up with a check and do this absolutely correctly because I get one shot to ensure that this client's this client's, his affairs are in order, so to speak. But when I think about this past, it's one of those things where I think I got into the life insurance business from a standpoint of ambition. I can make a lot of commission over here. Unfortunately, I will say that a lot of advisors get stuck at that phase. This is a place for me to make as much commission as I possibly can. Sure. And regulation is there. Different parts of the world. I live in Dubai, and we've got our own set of rules and regulations to follow. The US has got its own, Canada's got its own, Australia's got its own, and they try to regulate this. But the reality of the matter is like antiviruses that show up after a virus shows up. The regulation is usually, following something that's already gone wrong, right? So there's always someone trying to beat the system. And I feel when that gets amplified, when you see the number of people that have issues with life insurance companies because of non-settlement of claims, et cetera, and they're valid. There could be so many reasons for that. The amount of bad press that gets versus the number of people who have claims settled absolutely fine, it's kind of lopsided. It is a difficult industry to trust, I'll tell you that. But I also will say this. Uh, I've been in the business for a while. There are clients of mine who've been with us for over 2 decades. And as long as that relationship is developed and evolved, as long as you keep showing up, thinking about their interests first, nobody then cares about what you are making as a result of it.
Yeah.
Everyone's okay with that. As long as they know that you've got their interest first. That's aligned. Yeah.
So that's what I was going to ask you is for somebody who's looking to buy life insurance, what would they be looking for from the advisor to help them feel safe?
I can tell you what I do differently. I don't sell any products or services that I don't personally own, right? Over the years, and I've got a story over here because years ago, I was somebody that was overworked. I worked about 14 hours a day, 6 days a week, managing a team of about 60 advisors. My daughter was 9 months old and I barely had time to see her. I was morbidly obese. I think I was about 309 or 310 pounds. I had acid reflux and I was doing roughly about 132 transactions a year. Listen, I was chasing this goal of more is better. And more maybe was better because I'm still ambitious. But I think that part of my life is misguided ambition because that's the part of my life where I assumed that the only way to grow is to do more, meet more people, have more client meetings, get more advisors, etc., etc. And when I think back to that Rickson had no definition of a right fit client. Anybody that was willing to talk to me about life insurance was fair game. This could be a CEO of a company, this could be a high net worth entrepreneur, and this could be the entrepreneur's coffee guy. I would deal with everybody, right? And the problem with that is because there was zero focus. The products and services I offered to high net worth entrepreneurs were not the same things that I was purchasing for myself because I wasn't in that category, right? But today and over the years, we redefined and we reapproached that growth curve. And I think ambition, as much as it is important, years ago, I crossed paths with an advisor that told me he made $4 or $5 million a year as a life insurance advisor working with just 4 clients a year. And I was like, what? Unreal. I was working 132 clients a year and barely making about $600,000. And this guy, father of 3 kids, was working just 4 clients a year and making over $4 or $5 million. And he explained to me how they were very specific about the type of client that they wanted to work with. And this must have been about 2009 or 2010. And that thought just got planted in there. Now, the reason I'm telling you this long story is today, the kind of client I work with is a high net worth or an ultra high net worth individual. But most importantly, leave aside the financials, I have a lot in common with that person. I'm a Gen Xer. Most of my clients are Gen Xers or baby boomers. If I do deal with a millennial or a generation younger, it's because the decision maker over there is a Gen Xer or a baby boomer. And I can identify with those 2 generations very easily. I live in Dubai. We're a multicultural society, but 90% of my clients are from the Indian subcontinent or the Arab world. Again, they have a lot in common with me culturally. And then the age gap, the ethnicity, the entrepreneurs, they have to be married with children because guess what? I'm married with children. In most cases, the products and services that I recommend to my clients are products and services that I personally use. Now, validating whether the advisor is right for you or not, the easy way of looking at this saying, are they qualified? Sure. But I feel that's a very low bar to set. What we need to think about is, are they relatable? Are they people who've dealt with these situations themselves? Are they talking to me because out of experience of working with the product or experience of selling the product? Right? I use the products and services. My turning point was because At 33, a life insurance company charged me 100% more than the average person because I was morbidly obese, right? And that transition made me change everything else about my life. And today, the products and services I have in place, by the way, it's not uncommon for me to land a client who's unhealthy and have them go through the system for the next 2 or 3 years, ensuring that we help them bring their premiums down by encouraging a healthier lifestyle, right? I love doing that because that was my journey. So that relatability, if that is there, I believe the conversation will be a lot more easy from a flow perspective. I don't think people will think that they're being sold by someone who's trying to just make a commission.
When somebody has a question of how much coverage do they actually need, that's a big one.
It is a big one. It is a big one. So I'll tell you, there are two versions of Rickson. One that was pre 2016 and one that's post 2016. And the last 10 years of my life have been focused on a specific type of client. Their net worth is in excess of 100 million US dollars. Some of them are billionaires. And when you're talking, and that segment looks at life insurance differently from the average Joe. The average Joe is, as you said, approaching it from a standpoint of how much do I need? And the reality of this is you don't need an advisor to help you plan that. There are so many credible online calculators in a span of 2 or 3 minutes of you just answering an interactive sort of an app or questionnaire. It will be able to calculate to the dollar, inflation adjusted, how much of life insurance cover should you buy right now, right? What do you need right now? And what should be closer to an inflation adjusted contract, let's say 5, 10, 15 years from now, if you want a future plan. This is simple. And that for that audience, I'd say really, honestly, it's very simple. Get down to these calculators. There are tons of them online, and you can do two or three of them. Their answers are not too far away from each other. Maybe a couple of dollars here or there, a couple of $100 here or there. And I'd say whatever comes up on the screen is an indicator for you in terms of how much is a good number. The other way of approaching this is to basically go to an insurance company and declare to them your financial situation. This is my income, these are my assets, this is my liability. And based on that, they will come back and say, we can offer you a maximum of X amount of dollars of life insurance. If you look at the number that's on your screen from the calculator and what the insurance company has offered you, there is a range between that number and that number. And anywhere on that line, if you pick, you won't go wrong. With this being the minimum and the threshold that the insurance company is willing to offer you being the maximum. But that, like I said, is the masses buying life insurance. The high net worth and the ultra high net worth segment is not buying it from a need basis. They're buying it from a simple place of affordability. If they have the right health right now, then the question is, what is the maximum amount of cover they can purchase today when the going is good? They don't even know when the requirement for that contract is going to be because for them it's a liquidity situation. It's a potential key man risk for their business. It's a potential tax situation for their family after they're gone. There could be so many things that they don't even know right now because they are still in that phase of earning more money, building more assets, and potential tax liabilities on those assets that may creep up in the future. So for them, it's a liquidity game. They buy it from a place of how much can I get? What's the maximum you can give me? And I will buy that based on my current financial situation. What can I afford to pay out as premiums? It's two different ways of thinking.
If somebody was to ask you whether they should purchase term or permanent whole life, what would you recommend for the average person?
The right answer would be yes. I'll tell you why I say that. My own life insurance is a combination of term insurance and universal life. My term insurance is basically what bridges the gap for me between what I want as permanent insurance cover and what I can afford to pay as premiums. Term insurance is super cheap. The problem we have with term insurance is it has an expiry date, right? When I look at my universal life or my whole life policies, these are contracts that are designed to outlive me. My approach for those contracts is a legacy for my kids, is a legacy for my grandkids. Term insurance is just bridging that gap between what we need as a liquidity situation if I'm not in the picture and what I can afford to pay as premiums. So term provides me that hedge. I don't think it's a good or a bad deal because if you ask me again 12 years ago, when my financial situation was very different, all my cover was term insurance, right? It comes down to affordability. Everyone's individual situation is different. Term insurance, I think the thought process around term insurance usually is I can buy term insurance and I can invest the difference. On paper and in theory, that's absolutely bang on, provided you are disciplined enough to actually save and invest the difference. Many people who say that buy the term insurance and they forget the investment element of it,
Hmm.
right? Whereas in a universal life or a whole life contract, they're not designed as great investment products, but they're there to ensure that there is a guaranteed payout at death because these policies outlive you. You know, they can
Hmm.
run till the age of 120, but the average age of the individual is 87. So there's a guaranteed payout. Yeah,
So,
right.
so I'm trying to determine maybe there's some top line characteristics that maybe qualify people more for a term versus a whole. What would be some of those simple things somebody could ask themselves right off the bat and say, hey, this may be more of the direction I should go into based on these certain attributes that I'm currently in?
If you are disciplined enough to invest your money, simple. Term insurance is great. Invest the difference. Something as simple as the S&P 500 compounded over the years will give you great returns and will definitely amount to more than your whole life policy would have given you for the same money. Guaranteed. Great. That's one. Two, if you have any debt that you need to offset from a liquidity standpoint. That is that you want to make sure that in the event you pass away, nobody else is left behind with your debt. Term insurance is a perfect plug and play for that because it is super cheap. You end up paying 0.2, 0.3% for it versus maybe 1 to 1.5% for a universal life policy per annum as premiums. That's a big difference over there. So things like that. I think if it's a short-term requirement and you know it's short-term, term is a good way to go. In the insurance fraternity, term insurance is usually referred to as temporary insurance. And permanent insurance is basically whole life or universal life. I can see a place for some amount of whole life and some amount of term insurance in pretty much anybody's life. The key thing over there is what does affordability look like? Right? If affordability is not there, then the whole life or the universal life gets wiped out, and you just focus on the protection on the cover. Yeah.
So when you talk about affordability, and I'm glad you mentioned that because one of the biggest drawbacks for a lot of people is affordability when it comes to life insurance. And I think it's common knowledge that the older you are, the higher typically your premiums are. However, people in their 20s and some people even in their early 30s don't really think about or inquire about life insurance when I'm assuming it would be at its cheapest rate or cheapest premiums. Why is that? Why are people not geared more towards locking in at an early stage and enjoying the benefits later on versus waiting till they're older in their 40s and 50s when the premiums are going to be higher?
You know, I think we started this conversation by saying people usually buy life insurance when something happens in and around their surroundings. When someone near or dear to them has experienced something. How many people in their 20s and 30s are experiencing that?
Hmm.
Right? It could be a freak accident. Something could go, it could be a one off case. But how often are you hearing a 20-year-old, passed away because of old age or had a heart attack or something? It doesn't happen, right? I'll share an interesting story with you. Years ago, when Kobe Bryant passed away in that car crash, we were in that helicopter crash. We had a friend, a business owner, an entrepreneur who ran a series of restaurants in Dubai, did really well for himself. He had two kids, happily married, great guy, And I approached him a couple of times because we were friends. We spoke about things all the time, and he joked about how he would never require life insurance. 2 days after this situation took place with Kobe, he gives me a call and he says, "Can we meet up for breakfast?" He didn't want to meet up at his own restaurant. He wanted to meet up at one of the other coffee shops. We caught up, and I was very curious. I didn't even for a second believe or think that he needed to talk to me about life insurance because he was so anti life insurance. The funny thing is, his birthday And Kobe's birthday is the same day and the same year. And all he could think about since that happened, and he was a big basketball fan, and all he could think of is that when that happened is, oh my God, he's untouchable. And look what happened to him. And he thought about it from a standpoint of, I've got two kids, right? And if something happened right now, I don't have my affairs in order. In my head, I was thinking, you are surrounded by other entrepreneurs like yourself who are clients of mine who've constantly told you, talk to Rickson about life insurance, and nothing happened. Kobe Bryant dies in the US. You're living in Dubai. This happens thousands of miles away. But that was the trigger that made him move. So if you ask me today, what makes a person choose to buy life insurance or what makes a youngster not buy life insurance? At that age, you're not sitting and thinking about death. It's the idea of investing sounds a lot more exciting than the idea of protecting yourself for something that could happen in your 50s, 60s, or 70s. The probabilities are stacked in your favor if you're younger, right? So I think it's valid. I bought my first big life insurance policy at 33. I've been selling life insurance since the age of 21.
Well, and that's a perfect segue to my next question, which is somebody in that range of 21 to 30, what would you say to them to influence them to start investigating and taking interest into getting life insurance at this point?
I wouldn't necessarily try to convince them to buy it, to be honest. We were told when we got into the industry that life insurance is for everybody. Everybody needs it. But when I really think back on that, I don't believe that is true. I mean, the reality of the matter is you take some risk, but the reality of the matter is if you do not have anybody who are financially dependent on you, what is the purpose of that life insurance? Who are you going to leave behind that payout to if literally nobody is financially dependent on you? It's a different thing altogether if you've got financial dependence, people that rely on your money coming in on a regular basis. That's different. That age doesn't have any thing on that. But if you don't have somebody who's dependent on you, what's the need for life insurance? I can see the need for long-term care. I can see the need for critical illness. I can see the need for medical insurance. But life insurance, I would question that today, right? And I do meet today people who are in their 40s, in their 50s, have their affairs in order, and the need for life insurance may be completely minimized because they have been such thorough planners. Could they use some? Sure, but that would be a luxury now. It would not be a necessity.
So even though starting younger, you'd be paying less for your life insurance, is
Agreed?
there a cost savings that would really make a difference between a 25-year-old getting started versus a 45-year-old getting started?
Absolutely. There would be a cost savings, definitely. But on the flip side of it, if you think about it, when you're in your 20s, your income is so much lesser, right? When you're in your 40s and your 50s, your income is so much greater. Now, let's say you put aside 5% of your income, hypothetically, in your 20s towards a life insurance policy because of the cost savings, versus in your 40s, you need to put up maybe 5% of your income at that age, right? It's a very different number, but the difference is 5% out of your income in your 20s takes a lot out of the bank. It leaves you with even lesser money to be able to manage your own personal finances and your real needs. So, in the long term, are you saving money by buying it earlier? Absolutely. But in reality, that money could take you so much further if you don't really have a need for that cover right now. If you leave aside the math behind it, right? If you leave aside the, hey, it's cheaper right now, so I should buy it right now so that over 40 years, I've saved X amount of dollars. Sure, that is sensible math. But could that money that you're making in your 20s right now give you better medical insurance right now? Could that be invested in equity markets to give you a better compounded rate? Could you get a better, more nutritious food for yourself right now? Right?
Hmm.
So it's the question about what's on the line. What are you gauging it against? And it can't just be the math part of it. But if you did speak math, yes, it's cheaper to buy it when you're younger. You would have paid for a longer period of time, but in total, you would have ended up paying a lot less.
Hmm. And thanks for that clarity because it really is about dependence and who you are leaving this money behind for. So, if I'm hearing you correctly, one of the benefits would be if you want to be financially sound in your 20s, it would be saving money, investing money, building those practices of investment. And then when you move into those dependency ages where you have a family, you have people who depend on you, you could start investing into some sort of life insurance, already having that baseline of investment. And you probably look at life insurance at that age differently than as an investment.
Absolutely. It becomes more of
Mm-hmm.
a necessity, right? It becomes
Yeah.
more from a responsibility standpoint. You know, you've got people to look after if something goes wrong. This is one of the things that you put in place. It's just there.
You said earlier that you started in this industry from a place of selling to everybody, or at least that's what was told to you. Life insurance is for everybody, but somewhere down the line, that trajectory, that way of thinking changed for you.
Mhm.
How did that happen?
Burnout. Simply put, burnout. I became morbidly obese. I got charged a very high premium for my own life insurance policy. A conversation with a senior underwriter revealed that my dad passed away at the age of 59, by the way, and the primary cause was uncontrolled diabetes and all the resulting conditions thereafter: elephantitis, heart issues, kidney failure, etc., etc. And when I put application in for my life insurance policy after my daughter was born, I was 33 years old. I was morbidly obese, and I had no health issues except the fact that I was heavy. But the underwriter, the senior underwriter, pointed out to me, based on my family history, that the only reason I didn't have any medical issues yet was because I was in my early 30s. And he reminded me that my dad got diagnosed with uncontrolled diabetes around 35, and I was 33. And at an insurance company, he seemed pretty certain that the insurer would need to have to pay some form of a claim payment to me or my next of kin. That could mean either early death or early critical illness before the age of 68, based on my family history and based on my current health. So that was my misguided ambition phase where I work 60 to 80-hour work weeks because the way to earn more is work more, right? That's when I approached literally anyone and everyone to talk to about clients, to talk to about life insurance. That thought process moved because we experimented with an entrepreneur that needed some specialized work done. We ended up working on that deal for over 3 to 3.5 months. It required a complete audit of all his contracts. I was very excited about working on something that wasn't a copy and paste solution. And it resulted in an over tenfold increase in my income per contract on that one deal. I took that extra money and rather than banking it for money in cash, I banked it for time. And rather than going out and spending that money and then just going back to my old life of working with everybody, we decided to put that money away to buy us more time. And in those extra 6 to 8 months that we had, that money could pay our bills for, we started looking for more clients just like him. He ended up being a high net worth entrepreneur who loved how I presented myself. He was about a year or two older than me, but we had a lot in common. Same age group, same ethnicity, entrepreneur, married with children, a bunch of things. And then we decided we just want to work in that space. Now, don't get me wrong, that doesn't change how I feel about who needs or doesn't need life insurance. That just changed my thought process on whether everybody needs my services just because I can provide it, or should I pivot myself towards another audience? Because apart from the fact that financially checked all the boxes, mentally and intellectually, it challenged me. It wasn't copy and paste solutions. I wasn't talking about the same life insurance, yes. For the same reasons, no.
So, was it a matter of reducing the amount of people you needed by having a smaller group of higher net worth people that allowed you more free time, more balance?
So, yes, it was about working with that bigger ticket customer, intellectually challenging myself, applying myself more, understanding their problems more, specializing in them only, freeing up more time and space, getting my health in check, spending more time with my family, spending more time learning, getting coached. But the other side of it is I told you I came from a place of burnout. Burnout for me is when I reached that point where a gastroenterologist said you need corrective surgery to lose weight because if you don't, you're not going to have a voice anymore. Your acid reflux is going to, it was one of those things where it was critical. I needed to do it now. And once that was done and you've crossed over, why would you go back and make those same mistakes again? The reality of the matter is what the average Joe needed from me as an advisor is something that an advisor who had spent 3 or 4 or 5 years in the industry can more than sort out. So I was just providing a service because I could. Right? There are so many things we can do as human beings, but we don't do them. And this was one of those things where I said, I can do it, so I will do it. And now I'm thinking about it is, do they qualify as someone that needs my time, my attention? Does working on a situation like this bring me joy? Am I intellectually stimulated and challenged? And is there anything in common that we have that goes beyond the transaction? Can I invite this individual home to my house for a meal with my family? Because I'm talking about getting them life insurance policies that are guaranteed to outlive them, which means at some point in time, assuming I'm still alive, someone from their household is going to call me up and say, hey, guess what? He passed away. Rickson, we need you to show up with the check. If I don't like this person, if I had nothing in common with them beyond the transaction, 40 years from now, what's going to motivate me to show up with that check? It's not that it's dependent only on me, but it is a promise I made to show up. So today we look at what is the lifetime value of this relationship? Not financially, not economically, and that's the whole thing, is what's the stickiness to the relationship? Is there something more than the product sold and the commission earned? Because that's a transaction. But do I want to meet this person beyond just the work, right? Are we thinking about lifelong relationships over here? And if the answer is yes, me and my team are all in. If the answer is no today, and I say this from a place of reflection because your last question for the day is going to help me put this together. But if there isn't anything more than a transaction on the table, I'm happy to walk away from the transaction if I don't see the alignment. Because again, we've made those mistakes before and they didn't turn out well.
How did you get to alignment?
Day to day, that was me waking up super early. I've always been an early riser, and me trying to make the most of the time that I had. I needed to get out, be in the office, be with my clients, be with my advisors, run the business as well. And I had a business partner, my brother. And over the years, that relationship went lopsided because we started seeing things differently. There was a hostile takeover, which means I lost that one. As a result of that hostile takeover, I ended up in debt of over $573,000, which was money borrowed from a loan shark at over 30% per annum, which over the years to follow ballooned up to over $2 million US. When you say burnout, I mean burnout on absolutely every level, not just physically, health and fitness. No, I didn't have time. I wasn't spending time with my family. I was losing my cool a lot. There were a lot of pressures, a lot of tensions. There was financial things to worry about. There was everything. One of the aha moments over there is for me to deal with that debt of $2 million and service an interest rate of $600,000 a year. Those 4-figure commission checks weren't going to cut it. Landing that big deal that time and then leaning back from a place of confidence, or rather looking back and seeing what I've accomplished in that period of time, realizing that I had what it took to deal with that caliber of clients, where the paychecks could be larger, which could help me deal with my financial situation, but also lead to more meaningful relationships with clients who needed something more than a transaction. Listen, all of this had a lot to do with everything that happened along the way. I can't pinpoint one specific thing and say this was it. When I had burnout from absolutely every level, right? It meant me asking family that was living, my mom and my younger brother who was living with me in my house with my wife and my kids, to leave the house because I felt taken advantage of. It meant me firing my younger brother from the business because he showed up to the office an hour and a half late. And I saw that as, hey, people are going to look at this and say, this is the boss's brother, so he's allowed to come in late. And I wasn't okay with that. I showed up early and I needed to make sure that everyone that represented us was on time. So I fired him. That damaged my relationship with him for 10 years. You know, the hostile takeover with my older brother from his side had to do with the fact that I didn't want him as a business partner anymore. You know, this is all a Rickson problem that I just projected on them, and people reacted, right? So burnout for me was having absolutely every single quadrant of my life being completely unsettled, not just financial, not just health, but everything, right? And understanding that I didn't like the person I became as a result of that, knowing that I had the potential for so much more as a person, as a human being. And I'll tell you another thing, being at the same time being surrounded by a community of entrepreneurs through coaching programs, that was my saving grace, because those are the people that didn't push me to do better, but they just pulled me up to level up with them. And
I was gonna,
that was amazing. Yeah.
I was gonna ask, how did you get out of that stage that you're in of burnout?
I say misguided ambition all the time because it's funny. It sticks with me. It stays with me. The thing is, when you're there and you realize how bad it is, you know that everything going forward has to be an improvement from it. I was part of a coaching program, and I still am actually. I'm with this coach in Toronto that I see once every 90 days. And the room is full of entrepreneurs. Most of them were much older than I was at the time. They were in their 60s and their 70s. And when they spoke about things that they regretted, very few of them said the regrets were around, oh, I could have made more money on that deal. But a lot of them who had regrets, they had regrets around personal family relationships. There were conversations about how some children don't speak to them anymore. They haven't spoken to each other in years because they weren't present. You know, there were those things that I had the opportunity to sit in that room in my 30s and listen to these guys talk. And not a single one of them said, I should have made more money. You know? So for me, just realizing that I was going in the direction which was probably going to lead me to be sitting in that room at my 70s saying, oh, my kids don't talk to me. I couldn't fathom that. So I had to change. There was no choice really. I had to change, but I had to change knowing that the debt had to be settled because that was on me. It was my problem. There had to be some ownership over there. I could say, and I could talk about it all day long, that my brother and me were involved in a hostile takeover. He took over the business. You know, my other business partner and me went separate ways. I could blame my financial woes on everybody. But when I did that, and when I do that, I'm giving away that power to change that situation. So taking control of the situation meant being clear about what my goals were, taking ownership of that situation completely and working around it, figuring out what my numbers really looked like, understanding the tactics that I needed to work and take out of my business to work on things, thinking about who is the right fit individual that I wanted to work with. That's a big thing for us. Who's our right fit client? Obsessing over that result, showing up every single day. And the last part of that narration, which I just gave out to you, is the L in the book Take Control. That was the whole thing. And the L over there was for the most important factor for me because that means life. That's life for me. If everything else worked out, but my life was still as bad as it was before in the sense that I didn't spend time with my wife, my children, no personal relationships, but guess what? Financially, I'm super successful. It would mean nothing. So that was a critical piece for me. And every time I stepped away from the business to travel for a coaching program, I got some time to sit and think and meditate on this. And I came back as a better human being. I came back better with focusing more clearly on what I wanted to do and how I wanted to accomplish it. And I realized that success for me was critical. I am ambitious, but it couldn't be at any cost. I was clear about what the cost is. It couldn't be at the cost of my time with my family, time with my kids, at my health, or just dealing with people that I shouldn't be dealing with, really. You know?
Yeah, yeah, and I want to dig into what you just talked about there is your book, Take Control, because your framework control is really built around seven key areas.
Hmm.
You talked about the last one, the L, which is life, but it starts with clarity, ownership, numbers, tactics, right fit clients,
Hmm.
obsession, and life. So obviously, this was a result of all your experiences and especially the tension that you went through in burnout. So, for people looking to understand that framework and what each of those letters mean, can you explain what they mean in real time?
Yeah, absolutely. So, full disclosure, first of all, when I wrote this book, the book was written as a result of me presenting to financial advisors and life insurance consultants for the last 3 years and them having questions and doubts about the whole presentation. And we decided to turn that into a manuscript and put it out as a book. So, the book
Mhm.
is actually written to financial advisors who are my people, and it's Take Control, the Financial Advisor's Guide to Exponential Income Growth. What's not written in the book is without the burnout, because this would be me years ago. I would pick this book up and I would read it cover to cover because I just want to know how to succeed. But the book really focuses on how you can get to doing this. And the L, the last part of it, is where the whole life bit gets together. But yeah, C is for clarity, right? Clarity of your goals, being clear. I know when I got into the business, if I had a great mentor, but I met advisors who told me, I just want to do more than the previous year, right? I want to earn more. But there was no concept of what that number looked like. I want to spend more time fishing. What does that mean? There was no clarity in there. There was no definite plan. And I think that C, that clarity of goals is the starting point. Understand really what is the destination? Where do you want to get to? Ownership for me is critical because again, that comes with either you can give away all your power to a situation by not taking ownership of it, or you can own the situation. And I mean, own the bad part of it, the failures, and own the successes, right? Because if you own the failures, you will try and find a way to come out of it. If you blame somebody instead, you're not even giving yourself the chance to fix that situation. You're just saying, I can't do anything about it. It was their fault. The product was bad. The market was bad. Clients aren't buying right now. There's a war going on. There are so many reasons why we can blame somebody else for it. Whereas ownership looks at things from a different perspective. It's what can I do to change the outcome? What's in my control, right? N is numbers, and I'm a financial advisor. I'm a life insurance consultant. Numbers is everything, man. And I know what advisors do is they track their commissions. This is common. Every single advisor knows the commissions on a product. They know how much money they'll make if they sell a certain product or service. But they're not checking or tracking other metrics. As a team, and I have a team that works with me. They without them, I'd be doing very little, honestly. But they're phenomenal. They're an amazing team, and they track things for me. And based on all our tracking, we know exactly how many number of appointments we need to have with the right fit client to land our 4 cases for the year. It's data that we've been accumulating for years, and we're focusing on that. We're tracking numbers that are beyond just what's in it for us. What's the commission number, right? And that's critical. Tactics are are interesting. You know, I had a CEO of an airline buy a life insurance policy from me because we wrote a case study about him and we changed his name. We changed his, we made it so that nobody other than him would know it was him we're talking about. And we put his story out there. And when he read it, and I was on my vacation, he called me up and he said, Rickson, did you just write a case study about me and put it on LinkedIn? And I said, yes. And he said, why'd you do that? I said, well, for one, you keep meeting me at parties And you keep talking to me about why you don't need life insurance while we're not pitching to you. And I just thought, years of listening to the story from you, I knew everything about you. I needed to let you know why you needed it. You don't have to buy it from me. He bought a life insurance policy for me because that was the tactic we used to put his story out there for him to read and consume and understand that that story had a bad ending right now. He just asked us, how do we fix that problem? And that's when everything started moving. And that was a specific, that was intentional. Right fit clients for me is a big one because because not knowing and identifying my right fit client is what took me to burnout. Today, being very clear about the fact that we know exactly who we want to talk to. Who do we want to be a hero to? My coach, Dan Sullivan from Strategic Coach, always talks about this. And he asked us this question years ago: who do you want to be a hero to? And then I added to that in my head, I'm thinking, and what is the problem for this market that you want to solve? Now, unless I'm clear about that. I'm clear about who the hero market is and what is the problem. And I only say yes to those opportunities. Everything else is noise. It is an opportunity, but not for me. I'm more than happy to refer that down to somebody else. And I'm just sticking to my hero audience and the problem that I want to solve for them specifically. You know, one of the things about my past and my recent past is 2018 and 2019. I decided to deal with those skeletons in my closet. And my way of dealing with that was running an ultra marathon across the Sahara Desert. It's a 256-kilometer ultra marathon across the Moroccan Sahara Desert. You know, I saw the devil. It was amazing, but at that point in time, there was an audiobook that had released, and that was David Goggins' book. And David Goggins, in his book, and another author by the name Angela Duckworth, who wrote about grit. These were the two audiobooks I would listen to continuously in 5 months of training of running across the Sahara Desert. Because 4 days a week, I needed to get myself to the desert, which isn't a big ask in Dubai, to be honest. Get to the desert, and I needed to run for between 6 to 8 hours on my own. And I was obsessed. I had to be obsessed with the idea of getting those miles in solo on my own if I wanted to make it through that clarity of going across the Sahara Desert and completing that foot race, which was deemed to be, at the time, the world's toughest foot race. So obsession for me is a big part of it. And my wife says that to me. She says, there is no in between. You're either all in or you're not. There's no in between. There's no let's test the waters. And that is true. But for me, that worked out. Being obsessed about repaying that debt, being obsessed about making sure I spend time with the family, being obsessed that I shift my work life from working 60 to 80 hours a week to just 3 days a week. You know, that was an obsession. The last one is life, man. Today it has to be well balanced. It has to be well rounded. I want to spend time with my kids. I don't need to. I want to spend time with my kids. I want to travel with them. I want to have an impact. I want to help people. I want to help my industry. There are advisors that ask me for questions and doubts all the time. I love to spend time with them. I could instead not do any of the stuff and go back to working 6 days a week and making 2 or 3 times more commissions and earnings and income. But that wouldn't check the box of life for me. I would go back to misguided ambition. So yeah, that control framework, every letter in there is important to me, and yeah, it's changed. Yeah, the book is a result of the changes I made along the way. Um,
You know, it's interesting. You mentioned earlier, this framework coming from these engagements that you were having with a lot of other financial advisors. But as I'm listening to it, what I was doing in my own mind is I was translating these to life. And what I got, and you could tell me if this works in correlation, but your control framework starts with clarity. So, clarity, what do you want? What do you want to do? What is it you're striving for? What's your why?
yep.
Ownership, what can you control? And I love this one because we ask ourselves that question a lot. When you're stressed or anxious about things, what is it that you can control? Numbers. Now, financial numbers may not be the factor, so I equated this to time.
Yeah.
Where are you spending your time?
Yeah.
Are you spending too much time on one thing, too little time on another thing? So time could be that replacement there for financial. Right fit. Say no to what doesn't serve you and start to say yes to those things that light you up.
Absolutely.
Obsession, I love that. I think that applies to anything.
Yeah.
It's you just being all in. You know, what are your goals and are you all in? Are you 100% sold on this is what I want to do? So that obsession, that relentlessness to achieve. And then life, which is, you know, as you eloquated, just spending time around and doing what you love.
Yeah.
I think that's so important to really think about life and understand that it's finite, you know, and realize that we're only here for a short time, but make it a good time. Enjoy your life.
Absolutely, man. Absolutely. That is completely relatable, by the way.
So, Rickson, is there anything today that we didn't touch on that you wanted to talk about?
No, I think today, what I will say is my life has gone through so many different phases. And people ask me sometimes, would you change that part of your life? I mean, would you not have the debt with a loan shark? By the way, the loan shark was an amazing person. They were the most understanding. It's not the definition of a loan shark that I would like to put out, but fantastic. And would I change any of that stuff? Would I not have gone through burnout? you know and I think about even the obesity pit. I don't think so, because I think about this and I think today the person that stands here is the result of all of that. And without all of those experiences, I don't think I'd be able to learn this from somebody else's life, if that makes any sense. So
Hmm.
I like the fact that I'm happy about the fact that this was my journey. Everybody deals with their own level of ups and downs, let's say, and I'm happy I had mine. I'm happy I had these because the clarity is clearer. If anything,
Hmm.
it's so much
Yeah.
more focused. Yeah, no, nothing. Thank you.
Yeah. Just really recognizing that our experiences have made us who we are today,
Yes,
and the decisions we take today will make us the person tomorrow.
yeah,
Um, I love that. Rickson, this is the time of a conversation where I ask the guests to read their letter to their former self. So, what you would say to younger Rickson with all the knowledge and experiences that you have today?
I had an interesting time writing this down, so I'm going to read it out for you verbatim. And it is, dear 2008 Rickson, I see you racing, believing more advisors and more clients can unlock success. But that path brought liabilities, and you didn't realize it wasn't aligned. Trust me, fewer chosen clients and being the sole advisor will be the path to real growth. Back then, you couldn't imagine running, you were morbidly obese, and marathons were a dream, or not even. But today, it's not just marathons, it's ultra marathons, Ironmans, and growth isn't a sprint or even a marathon, it's just alignment with your values. Stay true to yourself and trust that your future will be beyond anything you can imagine. You will get there step by step, your own way.
That's great. Rickson, thank you for doing that. Thank you for sharing and being vulnerable. Very much appreciated.
Thank you so much for having me, Dwayne. I've enjoyed this a lot.